Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and in our show we'll be getting a company where we'll give you all the details about their numbers and to the management as well. But today's company in KYC, I'm going to give you some hints before we come to the company. The first hint is it's a Kolkata-based specialty chemical company. Yes, from Eastern India. This company is there, which would be in focus. Largely, it has been untracked from analysts, but that's our duty at KYC to get you more details on that. Interestingly, strong Q3 numbers are delivered, and I'm talking about the volume numbers here. Also, I'll give you one more hint. It has been a multi-bagger for the investor. The stock is up more than 852% in the last 5 years, and that is something which is very much important going ahead. But what the company is all about, I'll like to talk about it. It's of course a specialty chemical company and it's from Kolkata-based. That's enough hints to it. The company in focus is Himadri Specialty Chemical. That's what I'm talking about. This is the company which we'll be getting in. But the concern remains is, why are we getting this company? There are important reasons for it to get this company. Largely it has been untracked, so it's my duty to get these companies in KYC to get in more details and ask the management as well. The first reason why we are calling the company is what are the factors which led to a strong Q3? Is the demand, is the pricing, or some new announcements coming in? The second question is the pricing and demand trends for key products. This is a very important question because the chemical industry is a very volatile industry. Sometimes you look sequentially numbers, sometimes you look year-on-year basis numbers. The third reason is of course the value-added product. That's where most of the chemical companies are moving towards, which also includes Himadri Specialty Chemical. Because of that, the margins outlook, that also increases going ahead. Some of the products are having backward integration as well, and that augurs well. That's what the industry analysts say. The overall guidance for the next 2 to 3 years, the company is going through inflection. So what will be the important points to cover? What the company has already stated to the exchanges, we will get you all of them at our KYC show. And it's foray into the new industry verticals. You talk about lithium-ion, you talk about electrical vehicles. So where does the company stand? And especially R&D factor is very much important when you judge company which is going through an inflection point like Himadri Specialty Chemical. And also the expectations from the budget 2026. That's the burning question which we ask all the guests as we are going towards the budget in the coming days. So these are the important questions which we will ask the management also, and in the management would be Anurag Choudhary. He's the CMD at Himadri Specialty, where we'll ask Anurag all these key details and the outlook going ahead as well. But it's a specialty chemical industry, and I would like to talk about the company. It is a bit technical, so I'll try to make it simple for you. And what does the company actually do, and what's the outlook going ahead before we go into the ratings? The company manufactures carbon materials and chemicals. Just to put that in a simplified manner, there's a coal pitch manufacturer also in India. So there are different varieties of businesses, and company has been in an acquisition spree as well. They are manufacturing advanced carbon material in India. This is a domestic space, but they do have some international clients as well, especially in the tire industry. And also they are focusing on building comprehensive product portfolio of specialty tires in the coming years. Some acquisitions were also there, which augurs well for the company. To service the off-highway, that's OHT, which we call it, the commercial vehicles, agri-industrial and the EV segments. That is where the specialty tires foray comes in. And in this segment, the product margin is also on the higher side. They will be leveraging their expertise in the carbon black products to develop these tires. They are an old player already in the industry when it comes to the carbon black. Also, looking at how the financials are pointed out, I have taken a long-term view, the 9-month view, the 9-month FY26 view. The EBITDA per ton, that's a 15% year-on-year increase coming ahead, and the level is at 16,934 rupees. PAT, there's a significant growth, 41%. And it's around 564 odd crore rupees. So these are the 9-month numbers which I'm talking about. But moving on, apart from this, there are key clients also. There are Indian names. Of course, I've talked about the tire names. Apollo Tires comes in, Pidilite comes in, and also there are some international clients also which we would be focusing on. Apart from this, the company's recent news flow is very much important. 2 of them are there. The first is the first ever liquid coal pitching shipment that has gone to Middle East as well. This happened in the month of December. That's what the company stated. And also the trial production has started for the specialty carbon black capacity as well. Management seems bullish, and we'll ask Anurag on these important developments going ahead. FY28 growth map is something which the company has given, and remember, these are full year operations. The first is for specialty carbon black. Also moving ahead, other sector which will be focused will be the builder tires. That is where the production scale up is happening. It seems like a turnaround story is being played out. This is for OHT, this is your off-highway tires, and also the commercial vehicle and the PCR segment as well. The anthraquinone and carbazole, these are kind of a specialty chemicals. That's where the full year operations will also kick in. And apart from this, let's pull out the commercial plant for LFP, that is your lithium-ion, that cathode active material, that plant will also be operational going ahead. Naphthalene blends, Duroflex TM, that's the name which we are talking about. That itself will also see an important inflection point. But apart from this, let's move on to the show's format. When we get a company, I've explained to you what Himadri does and why we have called Himadri. But what are the key ratings for Himadri? There are 8 of them where we judge a company in KYC. This includes income statement, balance sheet, cash flow, return ratio. These are all the numbers I'm talking about. But apart from numbers, there's other story as well. That's the story of the shareholding, the street cred, how much the stock has moved, be it 1 month, 6 months, or even if you could say a 5-year basis. How do the valuations look? I've taken the past, present, and the future to give you an entire picture of how valuations come in, and outlook. That's also very much important, especially with a company like this on forward-looking sectors. The first one is definitely going to be the income statement, and of course we have discussed the 9-month PAT numbers also with you. But overall, let's look at the long-term basis, how things have moved. The revenue has done really well. It's 18% CAGR coming on a 3-year basis. But even if you look at the EBITDA numbers, that has also been strong. That's around 73%. But the most important thing is the PAT. That is where the movement has happened. It's up 105%. So on a long-term basis, for a long-term investor, this is a very strong numbers which I'm seeing. And net, the Q3 numbers also, if you see, there has been decent going ahead. But the net profit, that's up 36% on a year-on-year basis. So net, it's a strong thumbs up when it comes to the income statement. The second one, of course, we'll talk about it, but the margin trajectory, that has something which the management has walked the talk, and each time it is expanding. It's at 21% currently, and interestingly, we might see this up move going ahead as the company is focusing much more on the value-added segment. So the first criteria, we have already got the numbers. Let's go on to the second criteria. That happens to the balance sheet. Balance sheet net, remember there are 2 important aspects to it. Recently, the promoter stake also went up. There was a fund infusion coming in. That's where the strengthening also happens to the company. But the borrowings, that's something which has gone up. Company is going for expansion. So net, the debt equity ratio is not a big concern because the company is at that cycle of the business, you could say, and the cash balance is also very decent, 652 odd crore rupees. So it's a strong balance sheet. And of course, the borrowing levels is elevated, and that is because of the entire setup. But net, it's a neutral rating when it comes to the balance sheet. So we have spoken about 2 important numbers, but the third important number is also very much important, and that is the cash flow segment. How does the company actually work? And that is where some divergence is coming in my analysis. The net cash flows, of course, it's down 60 crores in FY25. We will be looking at the numbers in the 9-month FY26 also. That's on the positive side. But the cash flow to PAT conversion, that is really strong for FY25. And it has maintained itself over the last 2 to 3 years. And that is why I will be giving cash flows a neutral rating. Apart from cash flows, let's just talk about the return ratios. ROCs, when you look at it, generally anything above 15 to 20% for a chemical company is good. It's healthy. Let's see how much that has helped, and the way the margins went up. Now the ROC, the return on capital employed, that's also going up. There was some inflection point in these 3 years, but then it has sustained and maintained. That's the thing, 28% here, 34% here. The ROC numbers are very strong over here. So I would be giving this a strong thumbs up when it comes to the return ratios. We have spoken a lot about the numbers, but shareholding is very much important as well. There was a recent fundraise, there was a promoter participation in that, and the conversion was there of equity from the warrants, and that is why we see the promoter stake going up from 50%. it has gone up to 52% and it's sustaining here. You must be wondering what are the institutions doing, and interestingly I'd just like to point out the FIs, a minor stake increase is there from 5% it has gone up to 6%. On the other side, it might look like a reverse trade where the DIs have kind of increased the stake till March, but then again reduced it till 3%. And interestingly, the retail participation is very high in this counter, and that's what we have seen. But now it seems like it is slowly coming down as well. That's where the institution gets active. So net it is healthy, but I'll still give this a neutral rating when it comes to the shareholding pattern. Street cred, this is the next rating I would like to talk about. And net, if you look at the share performances, how it has been for last 1 month, it's up 7% odd. But if you're a short-term investor, be it 6 months or 1 year, that is where the downtick is coming in 6 months year-to-date basis. But if you're a long-term investor, congratulations, it's been a multi-bagger. 5-year returns has been 832% when it comes to Himadri Specialty Chemicals. So net, it is still a neutral rating when it comes to the street cred. But let's look at the 7th parameter, that's the valuations. Is the stock cheap? Yes, the stock is cheap. Why? I'll give you that example. Current P for the Himadri Specialty stands at 35 times the 12-month forward P numbers. But in the past, I saw how much changes which have happened. The peak numbers I'm talking about, the 5-year average high P, the high P, the peak P, that was 70 times. From there, it has corrected 50% almost, and almost 39 times is the 5-year average. So it's still below the average, 50% discount coming in from its peak, and that is where valuations turn very favorable for this counter. And over the last 1 year or so, if you see the charts, the stock hasn't done much. Now the numbers are coming and inflection point is also there. So it's a strong thumbs up when it comes to the valuations. But there's a last but not the least, the last is the outlook. The outlook, what does the company talk about? The company itself is moving towards the high value added products. That is where we are seeing the stock. The specialty carbon black, that's where the company wants to, come up with a full year operations, and the commercial plant, that cathode active material, that is where the completion will happen, and Street will be looking at when the incremental benefits come in. And of course, the naphthalene balls, the Durofresh segment, that is also a complete closure we can expect. Birla tires, that's the turnaround story which I was talking about. And also there are new age areas where the company is focusing on, be it electric vehicles, lithium ions. That is where also the overall outlook will be coming. And yes, green chemistry, that's what I'm talking about. Management has been bullish. We checked the annual reports, we checked the Q2 numbers, Q3 numbers, and also the investor presentation, and green chemistry has been talked about a lot. But let's give you the final ratings, the KYC ratings for Himadri Specialty Chemical. What are those ratings? Let's pick it up. Of course, the income statement was strong. The 9-month PAT number did exceed the FY25 PAT. The balance sheet and cash flow is largely neutral, but return ratios, they have been strong, more north towards the 30% odd numbers. Shareholding Street cred largely neutral, but valuations are very attractive compared to its peak numbers. It's down 50%, and outlook on the future chemicals, the value added segment, that is where I have given a strong thumbs up. So in total, the KYC rating for Himadri Specialty Chemicals comes in at 6 out of 8. Is generally on the higher side of the average KYC ratings which we give, especially on the future and the valuations front. That is where we feel there might be some alpha in it. But we caught up with the management. Anurag Choudhary is the CMD at Himadri Specialty Chemical to talk about the details on their growth outlook. Do listen into that. Anurag ji, welcome you to the show. Could you give us the key details about how the performance was in Q3? What led to this strong performance?
So, good afternoon, Sirji, and it's a pleasure to be on your show, KYC. If you look at the way Himadri has grown over the years, our business model has really matured. And today, the profitability which the company is earning is not a one-time effect. It's the result of years of strategic moves and building blocks that we have built over the years. So we have engaged with our customers in specialty products, worked on with them, our R&D team has worked with them, and we supply our customers the product which is not ready for today and meets the future requirements also. So this gives us a sustainable profit margin. In addition to that, we have done a lot of work in terms of operational efficiency, improvement of yield, waste heat recovery system. So all these factors put together, high value-added products have really been the game changer for us.
Just to put that in perspective, the company's focus is moving towards the high value products. But I did check, there are some vision statements. I think for FY26, you have already got all of your blue ticks done already. It's already tick mark is definitely there. But for FY27, FY28, how does the company change? Because there's a lot of, change impact written in your investor presentation. So what are the key strategic guidance and outlook going ahead for FY27 and 28, and you can divide it amongst different businesses?
See, I would like to summarize it in a different way. Like if you ask me for 2030 roadmap for Himadri, so 2030 from here onward to 2030, there going to be a big transformational journey which we are embarking on. So if you look at the existing product portfolio, we have doubled our capacity for specialty carbon black. This quarter, we have increased our capacity from 60,000 metric ton to 130,000 metric ton for specialty carbon black. We have announced a capex of 120 crores for anthraquinone and carbazole, very high value-added products. Then we have working on setting up first lithium iron phosphate plant outside China in the world with a capacity of 40,000 metric ton in the first phase with a capex of 1125 crores. In addition to that, we are working on other battery chemicals, components like anode material. In anode materials also, we are working on synthetic anode, natural anode, and silicon carbon. Only company which is positioned to cater to all three types of anodes, plus hybrid anode. This is a unique positioning which Himadri is going to have. These products are at advanced stage of research and development, and in next 4 years time, you will see a lot of these products coming into commercial production. So
Right.
with
Anurag ji, you spoke about the R&D part also, and generally R&D takes a lot of time also, be it the chemical industry or the medical industry. But your new products which are keeping on coming, any timelines if you could give us to our audience?
See, R&D is a long drawn effort. If you look back at Himadri, we have been talking about lithium ion batteries for last 14 odd years. So that time there were several chemistries were up in line, but since then we had a vision that this is the chemistry which is going to play a critical role in future. And today it's a reality. If you see today, everyone is talking about lithium ion batteries. And everyone is doing something or other related to this. But Himadri has the first mover advantage. We are working on this chemistry for many years. We have spent huge money in terms of research and development. For research and development, one thing, I was in Mumbai attending ET CEO Roundtable Conference the last month. The who's who of industry was there. So the one thing came out very clearly that globally companies spent 2% to 3% of their top line in research and development. But in India, companies are spending only 0.2%. So at that time I felt very pleased to say that Himadri is spending 2% plus in terms of research and development.
And Anurag ji, yeah, definitely. And Anurag ji, I presume you are in China right now, and largely any chemical player who is in China must be, of course, looking after some important businesses as well. So what is the ground channel check suggesting, for the company here? New order wins we can expect?
See, I keep on traveling globally. I have my R&D team right from Australia to Japan to China to South Korea to Europe to America. So we have a 148 members team with 24 PhDs in different streams of chemistry. So I keep traveling all over the world.
Yeah, that's pretty interesting on that. But Anurag ji, budget expectations. You are an industry veteran in the chemical space, so specialty chemical also. What are your views or request coming in for the budget 2026?
See, the government has been very proactive. The encouragement, the motivation this government is giving is unparalleled. See, in most of the sectors, they are coming up with PLI scheme. Recently, they have come up with a R&D scheme in which they are encouraging investment by the corporates in developing new product process and technology, and Himadri is going to be an integral part of all these things. So I think what proactive steps the government is taking is in the right direction to convert India into manufacturing hub. We recently, uh, uh, even China, there was a imposition of duty, but they have removed export tax on battery materials. So that is again a positive thing for other geographies. And I expect the government to continue with the policies and strengthen the hands of the industry to do more research and development and uh, make India Atmanirbhar Bharat, our Swapna of our
Right.
Honorable Prime Minister, a reality.
Anurag ji, you spoke about lithium ion and also the carbon side of it. There's an expansion also taking place. Apart from this, electrical mobility, that is also a sector which, India, there's a growth coming in. Of course, the base is very low. So how do you positioning this and how the inquiry is looking like for this segment? I'm talking about your electric mobility.
See, Sarad, electric mobility as it is at an inflection point. If you go back, you see at a point when Nokia mobile was there and BlackBerry was there, we never ever imagined about uh, today's generation of phones, smartphones. So, but when the revolution came, the growth was unprecedented. Same thing is going to happen with electric vehicles. Today, it has coming at an inflection point. From here, you will see exponential growth coming in electric vehicles. There are many reasons which are supporting it. The running cost for electric vehicles is 1/8 of a IC engine. There is 2,200 plus moving parts in IC engine, whereas there is 23 moving part in electric vehicles. The maintenance cost is hardly there. So looking forward, you will see a big change happening in the mobility industry also. China is a reality now. In China, you
Yes.
see already more than 50% of the four-wheelers have been replaced by EV.
All right. Anurag ji, apart from this, of course, I would like to understand there's so much, futuristic, projects are there which is undertaken at Himadri. But any kind of fundraise, because I think there was a recent fundraise also. Going ahead, do you think another fundraise would be required or will it just come from internal accruals? Because your growth plans are very big for the next 2 to 3 years.
Recently there was a conversion of warrant which was issued to our team members and the promoters. So we converted that warrants into equity. That was the only fundraise. And there is no plan for any fundraise from third party in future. In addition to whatever capex we have projected will be met through internal accruals. If you look at the balance sheet of Himadri, we are a debt-free company. Last year we had a 381 crore plus cash positive uh, in our balance sheet. Plus this year we have 300 odd crores from our warrant conversion. And then we have in 9 months already we have 700 plus EBITDA. So looking forward next 3 years we have a huge cash accrual and already we have a capex plans announced capex plan of around 2,300 400 crores. Plus we will be also announcing few more capex plan of around 2,000 crores over the next 2 to 3 years.
Yes, Anurag ji, and what's the guidance going ahead for the company?
So 2024 FY 2024 we had a PAT of 411 crores. In FY 25 I gave a guidance that in next 3 years, that is by FY 27 we'll double the PAT to 800 plus crores. Good thing is that we have been able to do this in next 2 years instead of 3 years. Again now in FY 26 I'm giving a guidance that FY 25 we had a PAT of 548 crores. So we will again double this PAT in 3 years' time from 548 to 1100 crores by FY 28.
All right. Thanks a lot for that important guidance update coming in, Anurag ji, for taking out your time for KYC and NDTV Profit. Best of luck for the future.